Hey guys, David Robinson here. Welcome to the Apartment Investing Journey. Another great episode for you today. I am excited about our guest because I think he's going to be able to share some insight for you as it relates to transitioning from the corporate world into the world of real estate syndication. And he's had some significant experience and success in the last roughly year. And so I'm excited to talk about how he's been able to scale up so fast as he's made this transition into the space. And so, Tim Vitale, welcome to the show. Appreciate you coming on.
Hey man, thanks for so much for having me on the show. Appreciate it.
Yeah, my pleasure. So, as I mentioned, Tim is a syndicator in the Southeast United States. He quit his W-2 job in September of 2021 as Associate Vice President of Finance for a Fortune 500 insurance company. He had 0 units that he had acquired until July of 2021, and now he has 147 with an additional 34 under contract to close late December, which, this will probably air in January, so early January, so probably have that closed by the time this airs. So, Tim, obviously, we want to hear about the journey, right? So our podcast is all about this journey and this process that you've gone through to get to where you're at today. So let's back up and let's talk about what you were doing before, some of the background, and about this transition into the real estate space.
Yeah, I recently quit my job as assistant VP of finance. I worked on Wall Street for a little while when I lived in Manhattan working for that company. Those skill sets kind of transferred over from the W-2 corporate world into the, syndication world. Being able to review properties and analyze deals and really nail down on returns and expectations and equity multiples and all of those types of things are incredibly important because not everybody finds that part fun. And oddly enough, like I do find it fun. I don't find it fun going through like offering memorandums and T12s and stuff like that. But when you start putting together the pro forma and the picture and like what you can do with the deal and how fast can you get rents up, how much money you're going to put in rehab, you start structuring it in different ways with different equity splits and pref payments and waterfalls and cap rates. And, that's the fun stuff because there's so many different levers that you can pull in order to make a deal. And that's the fun part for me. The grinding part is not fun. But, those skill sets transferred over from the corporate world because I did a lot of financial analysis and I was always diving into expenses. And what's the number one thing people are always worried about in multifamily apartments is what's my expenses? What are my expenses? What's my expense ratio? Right. So those skill sets and that mindset definitely transferred over, which is incredible. So, I put in my notice and I quit September 2021. And my first real estate, I got into real estate originally like in January 2019, at first in the single family space. And it took me about 11 months to close on my first deal. And it just wasn't worth it. I mean, I was making like $150 a month, which was not sexy after a year's worth of work. I was like, this is just not working. And I paid for that property in cash. And I went and got a appraisal on it because I was going to refinance it and pull all my money out. This is going to be the perfect burr, blah, 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 blah. And I ended up getting appraised for the same amount that I purchased it for. And the other box on the appraisal said the income-based approach. And the income-based approach was exactly what I should have gotten for that number. And I would have been, a great burr strategy and everything. And, so I asked the appraisers and the lenders, like, what is this? How do I do this part? How do I get into this side of the appraisal? He said, oh, that's only for commercial real estate. So I started looking at it. First book I read was David Lindel's Multifamily Millions. And that was like the catalyst book for me to get into the commercial real estate world. And then it just kind of snowballed from there. I'm not going to lie to you. When I cut the cord of the single family stuff, like that was very difficult because I had done so much time networking, but it was like 3 steps back to take a million steps forward in the future. So I knew it was going to be ultimately where I wanted to be in the long-term success part of things. And, so that was early 2020. I closed on my first deal, which is a 91 unit property in Georgia in Friday the 13th in August, Friday the 13th. And then I was done with my day job September 26th, 2021.
So that was August 2020.
No, 2021.
2021 that you closed the 93
Yes, 6 weeks later, I was out of my job.
Okay. Love it. All right. So give some people some advice. Those that are in your spot that are maybe working a W-2 job, looking to transition, or maybe they're just in the fix and flip space or the wholesaling space on single family or small multi, and they're looking to get into bigger stuff. Like how did you go about making that transition? It sounds like it was pretty cold turkey. You got your first deal, you got it done, and you just cut it off. But give some insight to our listeners about, your thought process around that and maybe some advice.
Honestly, yeah. I mean, cold turkey works for me. I've always been a very black and white person. It's all or nothing. Everything's all or nothing, for better or for worse. Personal life, business life, everything is all or nothing. And I don't sacrifice for anything in between. And I think that there's value in that, because if you're in the fix and flip space and you're trying to do commercial multifamily, it's the same thing as having a W-2 job and also trying to get into real estate, right? When do you have the most success? You have the most success when you're focused intently on one thing and you're doing it the best you possibly can. So I would say, if you're in fix and flip, yes, you're in real estate, right? But if that's not where you want to be, you need to treat it how everyone else that's in a W-2 job is trying to get out of it by, and this goes, across the board, no matter what job you're trying to get out of and go into a next one, is you need to have a nest egg. You have to have some sort of momentum. And when you have that nest egg, you have that reliability and that cushion that you can fall back on, that you can live on those expenses for however long, right? Mine was 2 years. I was like, if I have 2 years in the bank, I absolutely will make it work, because if I can't put any money in the bank in 2 years, it was never meant to be in the first place. So build your nest egg and get some momentum. Close a deal, close 2 deals, have another deal under contract. When your other job starts to get in the way of growing your multifamily business, that's when just get out. And honestly, for me, I went into the corporate finance world because my parents always told me, get a good job, go work a corporate job, blah, 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 all that stuff. And I wanted that job security. I wanted that paycheck every single day. And I'll be completely honest here and tell you, like, I cried my last day of work, because that was such a difficult mindset thing for me to get through, a mental hurdle, and really a real breakthrough for me in order to get past that and move past my fears. And people always talk about, face your fears, this, that, and the other thing. My biggest fear was not having a paycheck every 2 weeks. So me doing that was monumental for me. And I don't cry, but, I broke down and I cried a little bit because it was scary. I mean, but now that I've been out of my job for about 2 months now, at the time of this recording, I could never see myself going back at all.
Yeah. Yeah. Love it. Great advice. So let's talk about what your business looks like today. Obviously, you've acquired, you got the 93 unit deal under your belt. You've got a bunch more in the works. How is your business structured today? Is it just you? Do you have partners? Do you have team members? What does this look like for you?
Yeah, I believe that commercial real estate is a partnership game. The bigger network you have, the more access you have to deals and capital, and you never know who you need to have boots on the ground. So I do have my own business, right? My own LLC's Upside Capital. That's, what I do all my business under. That's what I sign my documents on. But I network with guys and they have their own businesses, and we just have a very good understanding of, hey, if we get a deal, like, hey, we're probably just going to do it together because we have a good relationship. But we don't have a company where, each of us owns a third or 50% equity or whatever, because in another podcast I was on, we were talking about, why do I structure it that way? Because I feel like when you have people that are in different phases of their real estate investment career, you're going to find a KP, right? And they're going to sign on loans, and that's great. Then you're going to have people like me who are eager and hungry and want to go after acquisitions and things like that. And what happens when, say for example, 2 people are both that way, but then, they make their $5,000 a month goal and then their interest starts to fade, right? Then it feels like the other team members are picking up the workload and not getting paid for it. And this other guy's not doing anything and getting paid for it. So to combat that, we've structured it as you own your own business, and every single acquisition that we do, there's GP percentage buckets. And every deal that you do, it's what do you bring to the table and how much do you want to bring to the table on this deal? Maybe you got some personal life stuff going on and you don't want to be involved in asset management, but you do just want to raise money. Or maybe you just want to underwrite the deal. Or maybe all you want to do is sign on the loan. Every single deal has a what do you bring to the table attitude, so that nobody ever feels like they're not getting compensated for the work that they're doing, and nobody's dragging anybody else along. And if they don't like a deal or they don't want to be involved in it, they don't have to be. But it's kind of a roundabout way to say I have a really good relationship with my partners, but we're not like married to each other. We each have our own businesses, kind of like what was the like a note? I can't think of the word of it right now.
Oh, that's all right. So when
Yeah,
maybe a good way for us to sort of break that down is talking about that very first deal, right? So what were the
sure.
steps once you decided, hey, I'm all in on multifamily. I'm leaving with plans of leaving the corporate career, and I'm leaving the single family space. I'm going all in on multifamily. What were the steps you took to get your first deal under your belt?
So honestly, my first deal, I didn't find it. I didn't raise money for it. And the way that I got into it was because my mentors asked me to be part of the deal. I didn't have to bring anything to the table. And it seems like a really weird environment, and it is. But because I provided so much value to them over the last like 12 months, that they were like, "Hey, we need help." And the first person that they thought of in order to bring onto their team because they needed help was me, because I've done so much for them for such a long period of time and never, ever, ever asked for anything in return and never expected anything in return. They're like, "You are the perfect person. Like, we want you like to be involved in this deal. We don't know, we could have it forever. And we want you to be in charge of it. We want you to handle it." So they brought me on to do the asset management. It's not really the greatest story to talk about because I wasn't involved in like the due diligence, and I wasn't involved
Sure.
in a lot of the other parts. But that's how I got started, was by my relationship capital that I built with somebody else. And they had a deal and they needed help, and I could provide that help.
Yeah, well, I think, you say it's not like the sexiest deal to, review because you weren't involved on the front end, but
Mm-hmm.
it's a great story to tell to help listeners understand that this is a team sport, as you alluded to. As you get into the larger commercial multifamily space, if you're not a part of an established, investment firm that has a half a billion dollars under management, well, you're likely going to be partnering to get a deal across the finish line. And you mentioned that your mentors just wanted you, they were doing you a favor. The reality is they needed help, right? And you
Mm-hmm.
mentioned that. And so
Mm-hmm.
even though yes, they were doing you a favor by pulling you in, you had demonstrated that you had value to bring to the table with the past year's worth of effort that you've put in to building the relationship with them and showing them that you are confident and competent and that you have some value to bring to the table to help them get their deal done. So,
Absolutely. Absolutely.
is there anything that you learned in that experience of, being on the sideline and being pulled into a deal where it's already half baked, but you're responsible for the asset management? Is there anything that you've learned in that experience that would be helpful to the listeners?
Yeah, absolutely. It was just, trust your partners, right? I mean, they said it was a good deal, and they're like, "Here, we're going to give you a percentage of this deal." And of course, it was my first deal, so I was going to do it regardless. And it's funny. I actually told them, because of like just who I was like, I would have just done it for free just for the experience, to get that on my resume. And they were like, "No, no, 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 we want to pay you for this." And because I wouldn't allow them to pay me for anything else. But what was good to see was that, once you get it to the finish table, all this whole set of, it's like reaching a plateau. You close on it, and then you go right to the next plateau, and you have to continue that workload. It doesn't just drop off and you're done. And it was really cool to see because they already had systems in place. They already had a good relationship with the property management company and the construction and all of that. So immediately at my very first deal, I was able to see what a good working relationship looks like. And then I knew from then on, from day one, what I need to structure all my property management arrangements with, what they should be involved with, what the expectations are, how the communication should work, weekly meetings, going through the reports, like learning all of that stuff was invaluable by itself.
Yeah, yeah, love it. Well, let's before we transition and talk about a particular deal, this 32 unit in Somerville, I want to just get your thoughts on, what you see on the horizon for you, right? You've acquired 147 units. You got 34 more under contract. What is going to be your focus as you look into the next, 12 to 24 to 36 months?
Yeah, so we actually just got another, I'm looking at it on the other screen. We got another 45 unit deal as well. So it's at 79 units, and that'll be closing maybe early February. But the goal for next year is to have 1,000 doors under contract or closed on by then. Not necessarily like an assets under management perspective, but just a unit count number. And I'm also looking to do a mentorship and kind of coaching thing that's not supposed to be like a large scale operation. It's really just who are 10 people that value their time as much as I value my time, where I can help them because they've seen what I've done. Like, I lead by example, and they can see that, I've bought, stabilized value of our portfolio is going to be around 30 million when we close on these other deals. And David, I've never, ever opened up my checkbook ever to buy these properties. So I bought all of these properties with absolutely none of my own money at all. Never wrote a check, never sent a wire, nothing. So there's incredible value there. And people, I think, tend to identify with my mindset and my energy and my life of abundance, kind of the way that I like to live things. And if I can help inspire, a handful of people and dedicate the time to work with them one-on-one directly in order to help them grow their businesses, that sense of fulfillment that I get is my ultimate why. Far more than like the time freedom and the money freedom, the sense of fulfillment from helping others is what's in my future. And I don't know if that's going to scale to be like a Jake and Gino type thing, but just being able to help even the small group of people is something that I absolutely must do for myself, because I feel like I wish I had somebody like myself tell me all of these things as I was, kind of coming up and like learning and had this one-on-one experience. So just trying to be the person that I didn't have, when I was going through that process, and hopefully be that person for somebody else.
Yeah, love that. Well, I'll be interested to see how that goes for you. Maybe we'll have you come back on the show and talk about your experience in building that aspect of your business. I want to transition a little bit here in the time that we have left, and let's talk about this 32 unit in Summerville, South Carolina. If you can, let's just describe the asset for us, and then we'll go from there.
Yeah, this is a CC plus 32 unit asset. Bought it for just under $3.5 million. Got about a $350,000 renovation budget for the existing units, going through and paint, flooring, cabinets, et cetera, and so forth. Current rents are like $950, $975, a couple $1,000 ones peppered in there. And market rents like $1,200, $1,300, $1,400 in Summerville, South Carolina. It's growing rapidly like Charleston is. And we're starting to see those rent increase and those cap rates decompress significantly. I actually just hung up with a broker before we got on the phone here, and they told me what another deal is under contract for down the street. And it blows my 7-year pro forma out of the water.
Oh, that's great to hear. Congrats on that. How did you source the deal?
I didn't. One of my partners did. He found the deal, and he had the relationship with the broker. I specialize in underwriting, and he did some preliminary stuff just to have a conversation with him. But, the deal was been passed around quite a bit, and nobody could seem to make it work. But the way that we underwrote the deal and were able to utilize the additional space, there's a parcel of land that was included with the sale that nobody valued for some reason. So we included the value of that into the deal and found out that it was already zoned for multifamily. So we got 32 units. We have an additional 3-acre parcel of land that we're going to be developing around 28 or 30 units on. And as well as there's also another space on the land that we just bought where we could put another 4 to 8 units that's already approved, that our property management company is the one that knew about it and told us about it because we had those conversations. So we were able to make that deal work. And I mean, the equity returns for our investors are, we modeled like a 2x or 2.3x in less than 5 years, but it's going to hopefully be way, way, way higher than that because they originally invested in 32 units and they're probably going to walk away with like 70.
Yeah. So that other parcel that you mentioned, it's 3 acres. Is that correct?
Mm-hmm. Yeah.
And is it contiguous with the property that's already built out, or is it separated?
It's a different parcel, but they are kind of like backed up to each other. Okay. And there's an access point from the road that goes along the side of the property that is wide enough where we can put a 2-lane street in there in order to develop in the back.
Gotcha. Okay. Interesting. That's great. And so how did you go about structuring this deal?
It was a traditional 70-30 split, 70 to the investors, 7 pref, 15% hurdle. And after the hurdle, it's split 50-50. I think we did like 2% fees across the board, asset management, capital acquisition, and looking at we did bridge loan financing, Lima One, 6% interest, 24 months IO, interest only, so that we'll refinance at the end of year 2 after renovating all the units, getting the valuations up, and then we also we're looking to break ground on the development early next year, maybe middle of next year, and that should take about 12 to 16 months to finish as well. And then we'll be right on time with the 24-month interest-only loan and be able to refinance all of that and hold that asset long term.
And is there any aspect of this that was challenging during the acquisition process?
Finding out how to make that deal work. I mean, that was definitely the most challenging piece because it had already been passed over by quite a few people, and then when we announced that we had it under contract and they saw the returns we were posting in all the groups about, the 506C raise, they're like, how did you make this deal work? And then I told them, I was like, hey, look, like, you guys didn't value this land at all. And look what you can do with it. And they're just like, I didn't see that at all. So moral of the story is just because everyone else has passed over the deal doesn't mean there's not a deal there.
Yeah. And so you mentioned that your focus has been, and, obviously with your background in finance, underwriting deals and structuring deals. What are some of the strategies that you've either developed or employed to as you underwrite and analyze deals?
I mean, so it's just kind of having a lot of tools in your tool belt, right? I mean, everyone kind of defaults to like the Michael Blank style syndication, but there's also other models out there, and I always try to attack a deal with the Tim Brotz model, if you know who he is, where, the manager keeps 70% of the deal and the investor gets 30. So it's flipped. And there's no fees involved. And the investors get a monthly 10% pref. Right. So what you're doing is you're deferring your equity to make money until the back end, but you're keeping 70% of the equity rather than kind of padding some numbers on the front and getting some acquisition fees and things like that, because it's a long-term view instead of a short-term view. That deal, that only really works if there's, if you're like 60 to 75% all in of the stabilized value. But if you're not in there, you start structuring it a little bit differently. How can you keep maybe 50% of the equity instead of 30? And, you just learn what levers to pull and where to focus in order to try to keep the returns for your investors where they are acceptable, like in that 2x equity multiple range. But also try to keep as much of the deal for yourself, because deals are really hard to find right now. And I'm sure that people have been saying that since real estate got invented. But, it's you got to know which levers to pull. You got to know who to talk to. In our case, the who for that how was our property management company. They're the ones that told us about what we could do with that land. Then we put a value on it and made the deal work. So, it's who you know and who you're connected with in order to structure different deals and get information that you otherwise wouldn't have had.
Yeah. And so moving forward, with your emphasis on analysis and underwriting and partnering with other, operators and sponsors, do you see yourself, getting to a place where you're sourcing your own deals, or do you see yourself continuing to just work with other sponsors who are sourcing the deals and then you bring your skill set to the table?
The latter, definitely. I actually just made a post on Facebook the other day, and I'll let you know that this deal that I just got, is a 45 unit deal. And I said, hey, who out there needs money? Who needs earnest money? Who needs experience? Who needs help with due diligence? Who needs a lot of different things in order to get a deal across the table? And a guy reached out to me and he said, hey, Tim, I saw your post. I typically wholesale deals. But he was like, I saw your post and I was like, how can I keep this deal? And I underwrote the deal just now today, and I'm gonna tell him, yeah, like we'll do this deal and we'll take it across the finish line. And by putting out into the world what I'm good at, what I can provide, and where I need help. So I need help finding the deal, and they found that. But I can provide the money for the earnest money and the due diligence and all of that, because not everybody always has that liquidity. and I can help raise money for the deal because I have a big investor network. And I can sign on some loans, smaller ones, but I have a network of people that can sign on larger deals. So I can be the connector for you to be able to do your first deal and have no money of your own out of pocket because I'll be writing the checks for it. So I really believe in attracting deals and money to you rather than looking for them. And by posting the wins, by posting what you can do by helping other people with, writing those checks and things like that, brokers start to see the social media presence. They start to see you closing more deals. They see, the pictures of your lifestyle getting better because you're making more money. And then it builds your reputation and they start coming to you because they know you're a closer. So, it's definitely an interesting perspective. And it might not be for everyone because I personally don't like looking for deals, but there are people that, that's what they live for is the chase, the hunt, the look for the deal, the negotiating. I don't want to do any of that. All I want to tell you is, hey, go get me this number. This number works for our investors. And that's all you need to focus on is go do that part. And that's, actually why my partner, Tim, and I work out really well because he likes that part. And I don't necessarily like working with the brokers and talking with them and trying to negotiate. So he just tells me, he's like, hey, what's our max all-in number? I tell him that, and he goes and focuses on getting us the best deal possible.
Yeah, love it. Well, look, Tim, this has been a great conversation. I've loved hearing about your journey and your transition from your corporate career into the real estate space and going all in, and clearly your energy and focus, and you're a sharp guy, right? So you've been able to take the skill set that you developed in finance and bring that into the real estate world, and clearly you're headed in the right direction with all your success. I want to start winding down here, but got a few final questions for you. The first is, what's the biggest challenge that you've faced as you've been on this apartment investing journey that we could all learn from?
The biggest challenge was really growing my network with the right people. And what I mean by that is by when there was multiple partners that I thought I was going to work with, right? Because it was kind of a kumbaya, like, yeah, we're struggling through this together. Let's figure this out together. And really, that was not the right way to approach it. Like I should have found somebody from the start that was more experienced than I was and, could help me get into my first deal and that had a lot to offer and bring to the table. Because when you're first starting out, you don't really offer a whole lot. And, it was really challenging to meet the right people because, you meet a lot of people and you just don't know who's going to end up being your partner. So, again, going back to like growing your network and talking to as many people as you can, you're one conversation away from changing your life. And if I had never talked to my partner now, then, who knows where I would have been still, on the hamster wheel trying to figure it out.
Yeah. And do you have any advice for the listeners as far as like strategic, tactical advice about how to go about building those relationships and networking with the right people?
Find somebody doing exactly what you want to be doing. Right. I mean, and it's very cliche. Everybody says it. And that's kind of the art of the deal is, who do you want to be like? Who do you resemble with? Who do you get along with? Like, who could you see yourself being? Right. Who do you connect with? And find a way to bring value to those people. And I can tell you, like going back to my first deal, the 91 units, I found my mentors and I didn't have any money and I didn't have any deals, but I still found a way to bring value to them because I isolated what was important to them. And I didn't know I was doing it at the time. I just looking back at it now, I'm like, oh, well, duh, that makes sense. I did XYZ and now here we are. But in the moment, you do it because you want to and you like to, and you genuinely have this need to, help other people and provide value with no expectation of return, the go-giver principles that will come back to you. And clearly it did for me because I was talking to my brother, for example, and he was like, I don't know how you've stuck with this for 18 months and you haven't made a dime. And then I told him, I was like, well, actually, last week they asked me to be part of a deal. Now I own 8% of this deal, the total deal. And the equity that I'm going to make from this deal is like 3.5 years of salary. So was it worthwhile to spend all that time and effort for 12 to 18 months of building those relationships so that you can make money in the back end, right? And then once you do that first deal, then they start stacking up and it's the next one and the next one and the next one and the next one. And people can be so short-sighted in how does this benefit me today because they think they're more valuable than they are. Well, you got to earn your stripes. You got to, get in with somebody that's doing what you want to be doing. And I'm telling you, the law of reciprocity will take care of you if you take care of other people.
Great advice. Next question is, what's the biggest win you've had on your apartment investing journey so far?
I mean, that first deal, man. It's always the first. I think it's always the first deal because, if I didn't get into that first deal, who knows? Maybe I wouldn't have gotten into any of the rest of the deals. But when you get that first deal done, you have a kind of a different confidence and a different swagger about you, right? And you talk differently and you have experience now and you're quote unquote in the boys club, right? I mean, nobody can take that away from you. And now once you're in the club, like you see everything through a different lens and people look at you through a different lens.
Yeah. Well, look, Tim, a pleasure to have you on the show to hear about your own personal journey and your mindset and enthusiasm for getting into this space and giving back to others and really pushing things forward. I'm excited to see what you do in the future. What's the best way for our listeners to connect with you and learn more about what you have going on?
You can go to my website, www.upsidecapitalgroup.com, or obviously the best way to get in touch with me is through Facebook. My Facebook group is Making Moves in Multifamily. So I do weekly Facebook lives in there, where I interview different operators, and it's a very interactive environment because I can bring up the comments on the screen, and it's always done live and things like that. Shoot me a message on Facebook. Happy to connect with you. Or there's a Calendly link on my website, or you can go into my investor portal to see what kind of deals that we got going on in the Southeast. I know the market's incredibly hot. And our deals fill up really quickly in the Carolinas and Georgia and Alabama, just because the cap rate compression and the job growth and population growth in those areas. So, really, really high equity plays in the Southeast, which are awesome. And that's definitely the best way to get in touch with me.
Awesome. We'll have that in the show notes. Again, Tim, thanks for coming on the show and sharing your journey with us. And I look forward to connecting with you again soon.
Thanks, David. I appreciate it.